Hey guys, welcome back to YouTube here. My name's Liam, and in this video I'm going to show you guys exactly how we can trade the New York session. Okay, not only that, I'm going to show you guys exactly step by step how I executed this trade in the live markets yesterday, and this was on Euro USD on the 15-minute time frame. Okay, so let's just jump straight in. The premise of the video: how to trade the New York session. Okay, let's jump in, guys. So let's rewind this back to the start of the New York session, just so I can break this down exactly step by step. Okay, the first thing that I want to cover here is, what is the New York session, and why do we want to trade within the New York session? And it's very, very simple. Okay, so the New York session it starts pre-New York at 12 o'clock GMT. This is when I personally trade the New York session. Okay, so let's just play this on just so you can see the area that we're dealing with. Okay, so you can see this is the New York session highlighted within this sort of purple shaded area, and you can see it starts at 12 GMT. This is UK time. Okay, 12 GMT up until 3:30 GMT. Okay, so if and only if price is within this window, this time-based horizon, then I'll be looking at executing a trade. Okay, it's very, very simple. If price is outside of this window, for example here or here, then I'm not looking at executing in the markets. Okay, the reason why is because within this time horizon between 12 GMT and 3:30, we have the New York Stock Exchange open, and we also expect the most amount of volume to come into the markets within that window. Okay, so if you backtest New York sessions between this time, you'll simply see that this is the most volatile time of the day to trade. Okay, on top of that, we are trading a trend following liquidity system, which is very favorable under high volatility and high volume sessions. Okay, that's why it's very, very important to stick within these time horizons. Okay, one other thing to point out with a lot of new traders that they suffer with is they feel like they always need to be in a trade. Okay, they can never just sit on their hands and go, okay, between 10 o'clock and 12 o'clock, I'm going to do nothing. Okay, or for example, during the Asian session from 11 o'clock, 11 p.m., I'm going to do nothing. I'm not going to trade this session. Okay, because on average, there's not a lot of volume. Okay, so you have to maybe be honest with yourself and ask yourself, are you able to sit on your hands between 10 o'clock and 12 o'clock and do nothing? Are you able to wait between these time horizons in order to execute in the markets? Okay, because if you're not, and you're looking at following a trend following system, then you're already at a huge disadvantage. Okay, so make sure you're only trading during the highest volume times. Otherwise, you're going to be caught in a lot of consolidation. Okay, so let's run this back and let's run through this trade for you guys. Okay, so we're entering into the pre-New York session. You can see it is 12 o'clock GMT. Okay, the start of this area here. Okay, let's play price on. An indicator that you want to apply to your chart is the fractals indicator. Okay, I like to make mine black just to, it makes it very simple to understand where the most recent or fractals in general are. Okay, next you want to apply the 50, 100 and 200 moving average. You can do that by simply hitting the indicators tab at the top, typing in 50, 100, 200 moving average. The one by B Crypto Logical is the one that I personally use. Okay, so we want that applied as well. Okay, now let's jump straight in. We have a directional bias. So now we're looking at the sort of meat and potatoes of the premise of this video. which is how we can navigate and trade the New York session. Okay, we need a directional bias. We need a directional bias. So for the session, you know, where are we looking at trading? Okay, if you zoom out a little bit, clearly, you know, price is moving from top left to bottom right. Okay, so naked price action tells us sells. Okay, we've also broke below these structures here. Naked price action is indicating sells. Okay, however, we also have the indicator applied. You can see clearly the 200 moving average is above the 100 moving average, which also indicates our sell bias. Okay, so we're only looking for sells on this market at this current time. Okay, so let's play price on and let's zoom in here. So the scenario for me to be interested in shorts on this trade is we need to see a sweep of liquidity. A sweep of liquidity, okay, of a fractal high. So this is the most recent fractal high here. Let's mark that on. Okay, so if and only if price comes up and sweeps our most recent fractal, this will provide liquidity and fuel in order to push this market to the downside. Okay, the reason why we want to see a sweep of this liquidity, a sweep of this fractal, is because, as I said, this provides the fuel. But not only that, if you can't see the liquidity, then you probably are the liquidity. Okay, so let's play price on a little bit and let's zoom in so you can see this very clearly. So current time is 1:30 GMT, which is New York Stock Exchange Open. Okay, so going into the open of NYSE, you can see that we've swept above this fractal high here. Price is pierced above the fractal high. Therefore, we can set, once this candle's closed, we can set a sell stop below the low of this candle. Okay, give the trade a little bit of room to breathe. So, you know, give it a little bit to accommodate for spreads. And then also we want to have a 1 pip stop loss above the high of this candle if we are triggered in. So for example, if price now pushes down and triggers us in, we're going to have a stop loss above here and we're going to target a 1 to 3 risk to reward. Okay, 1 to 3. So let's play price on. You can see the next candle actually broke the high of the original candle we were looking at. Okay, so the next candle broke the high. Therefore, this order is now invalidated. Okay, we didn't break the low, because if we broke the low, we probably would have been triggered in if we broke the low first. However, we broke the high. So this then moves over the order to the next candle, which is swept liquidity. Okay, so we've had 1 candle sweep liquidity, 2 candles sweep liquidity. Therefore, the orders move to this one. We go accommodate for a little bit of spread, 1 pip above the high there. And we're anticipating, you know, if price and momentum want to come into this market, we'll be triggered in on the next candle, triggered in, and then we're going to look to ride that trade. Okay. It's very important as well. I know I had a few guys messaging about the 3 candle rule. So basically, we do not want any more than 3 candles to sweep liquidity. So for example, this is the first candle here. This is the second candle here. If we got 1 more sweep of liquidity, so another candle that broke the high, like this, then that would be the 3rd candle, and that would be the maximum amount of candles that we would want to see sweeping liquidity. Any more than that, what you'll find from your back testing data is that the win rate of the strategy tends to decrease dramatically. Okay, but ultimately that's your decision, guys, whether you want to have a maximum sweep of liquidity, a 3 candle rule in this essence. Okay, so let's play price on. You can see we're triggered in on the next candle. Okay, and this is a very important point here. So you can see we're triggered in, and then the candle sort of starts to reject to the upside. Okay, you can see that's indicated by this wick here to the, you know, as in sellers tried to push price down, then ultimately buyers stepped back in and we closed quite high up on the candle. One thing to note here is, you know, as a new trader or just in general, you don't want to be flipping your bias very often, okay? Because, new traders might see this as a breakout. So you see, okay, we closed above here, the next candle's rejecting, therefore I expect price to push to the upside. So either new traders might then close this trade early, or they might actually then flip to a long bias, and then, ultimately you're going to be getting wrecked in the market. So you don't want to be flipping your bias a lot. That's why we have a directional bias, and that's the one that we stick to for the session. Okay, so let's play price on. We're triggered in, and you can see within the New York session, the trade has hit a 1 to 3 risk to reward. Okay, 1 to 3 risk to reward was hit within 1 hour and 15 minutes. Okay, so you have to think, guys. So if you close this trade early, you would have missed out. Not only would you have took a small loss, you would have missed out on a 3R trade. Okay, and that truly is the difference between, whether you're going to be profitable or whether you're going to be a losing trader. Okay, within 1 hour, take profits hit. Don't get me wrong, guys. Do not get me wrong. This does not happen on all trades. Okay, trades that hit take profit, sometimes this happens. Sometimes it takes 6 hours, sometimes it takes 12 hours, sometimes it takes 30 minutes. Okay, but understand that, this is a very textbook trade which set up yesterday, and it doesn't always set up like this. Okay, I've been in trades that have took 2 days to hit take profit. Okay, whereas sometimes it can take 30 minutes. Okay, so understand that. Okay, so this is how you navigate. So the premise, how to navigate and trade the New York session using liquidity on the higher time frame, which is the 15-minute in this analogy here. Okay, we've got a directional bias, which is the moving averages. Okay, we have a sweep of liquidity, which is used as fuel, and then we've also got our entry trigger, which is on the break of the low of this candle here. That's our entry trigger. Look to target a 1 to 3. Understand the time-based horizon. We're executing within the New York session. We're expecting the highest amount of volume to come into the markets. Hence, just take a look at how clean this price action is, guys. Okay, don't get me wrong, it's not always this clean, but this is an indication that, we're trading during a very volatile session. Okay, we've got very clean price action. For the most part, price is just making lower lows and lower highs, okay, on a candle perspective. Okay, so that's it for this one. And yeah, I just wanted to show you guys how I navigate the New York session. Okay, if you've got any comments, guys, leave them in the section below. Any likes are appreciated. But yeah, I'll see you guys in the next one. Take care, guys. Bye-bye.